Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it started off on a fantastic note as far as the September month is concerned because the Nifty is now zoomed past the 24,600 mark. We're up by 200 points at the day's high point. 0.8% of an uptick and strong volumes can actually be seen pushing the Nifty on a higher note as well. Now, when we look at what's happening as far as the market momentum is concerned, even below the surface, look at even the Nifty Bank. It's trading at the day's high point, 0.6% higher. Remember, this is one index that has been a laggard of late over the last 1 to 2 odd weeks. But now you see further momentum picking up onto this space as well. IT names have been, of course, supporting the sentiments from the morning session. They've held on to this 1.5% gains right from the word go. Now, auto stocks have actually pulled up to the day's high spot as well as far as the sectoral action is concerned. 2.7% of a rally is what you see on the auto index, of course led by a lot of auto sales information that's coming in. Look at a Bajaj Auto, it's up by 4%. Now 8,972 is the current level. M&M, Tata Motors, Hero Moto, of the top 5 Nifty movers in trade, 4 of them are from the auto basket, and that clearly tells you how the momentum is shaping up in the auto basket. Now on the declining side, however, you do see some defensive names like, say, the FMCG names, HUL, ITC. You also see Titan, for instance. Sun Pharma is declining and Reliance is continuing to be volatile as well. But what is happening on the F&O segment? Keynes Technologies is higher by almost 7.5% up. Tube Investments is also up. RVNL, it was in the news flows today in the morning, and therefore the stock is also coming back into momentum. But let's welcome our guest on board as well. Mr. G. Chokalingam joins in, head of research at, Economics, and he's been sharing with us off late or week on week what his viewpoints are as far as the markets are concerned. And this time again, we have a lot of data points to discuss with him. Warm welcome to you, Mr. Chokalingam, and thank you so much for taking the time out. We'll start off with an overall view on the markets itself amidst all the moving parts. Globally, we have the meeting of Prime Minister Narendra Modi with the Chinese Premier as well as Mr. Vladimir Putin. So a three-way meeting that's taking place at the SCO summit is shaping up how geopolitics is likely to be shaped up going forward from here. So signals from there are definitely important to look at. Domestically, there are a lot of positive signals like the GDP data that came in on Friday that pushed up the sentiments for the markets yet again. So that's also keeping the stocks and the investor sentiment right on the edge. We're also looking at this week itself, which is going to be an all-important week because of the GST Council meeting from 3rd and 4th, and that will give us the finalization on the rates as well. So many moving parts. How would you look at the markets, and what is the best way to invest in markets at this juncture?
Yeah, good afternoon. A very interesting question, very comprehensive. I would be happy to share my views. Uh, you know, as long as Mr. Trump is not able to convince the European countries to join him in his aggressive trade war against India, we don't have to worry much. Second, as long as he doesn't touch the IT service exports from India to USA, then also we would be much better off. So the point is that potential possible risk factors come from Mr. Trump influencing European countries or disrupting our IT service exports to USA. I believe both events are most unlikely. In that event, I think we can manage to survive and maintain continuity in our growth momentum with a sacrifice of 30 to 50 pips on GDP growth, even though there is a restriction on a goods export to USA. So second set of factors which are helping the market to rebound today, the political realignment at a global level. As all of us know, India going closer to Russia, China. This is politically going to help India. Even economically, in the long term, it is going to help because we can see more stability on the border, not only with China, even with Pakistan, because of this realignment. That is also positive for the Indian economy and markets. And third set of factor, which has been helping the market ever since Mr. Trump started a trade war, our excellent monsoon, 6% surplus. There is again substantial rise in the Kharif area, so we can expect a record level of food grain production, lower inflation, and therefore reversal of interest rate cycle, RBI has to cut down the interest rate substantially, then oil price weakness, then as you also mentioned, GST reform. So all these factors augur well for giving some boost to the Indian economy to mitigate the risk coming from the USA. So finally, as long as IT services are not disturbed by Mr. Trump, I think we can manage this difficulty. So the research strategy which I have been advocating for equity asset classes, keep only 40% in the large cap. Traditionally the large Sensex Nifty stock would be defensive because DIs are buying. But what is happening, as you rightly mentioned here some time back, the market is down more than 4% till last Friday, despite DIs giving a lot of support. Because of FPI selling, the DI support was not able to withstand the meltdown in some of the Sensex and Nifty stocks. So I have changed my strategy. Instead of going too aggressive on Sensex Nifty stocks, some 40%, one can allocate 5% to gold, because definitely even the loss of business exports to USA will have little more impact on the rupee exchange rate, and that would be positive for gold. And the balance 50% one can put it in the quality small and mid cap stocks, because some of the quality stocks already proven to be quite defensive in this tough market, and they would continue because even last week more than 6 lakh new investors have come in. So the DI money also ultimately the retail money. So the retail money is coming directly to the equity. It is also coming through the mutual funds, even through insurance companies. Ultimately, it is retail money which is booming in terms of number of investors, in terms of magnitude of investments. That would give some sort of protection to quality small and mid cap stocks. So if somebody buys a wrong stock in a small cap space, then the risk is very high. So I would stress this point that one can definitely have a courage to invest even 55% of the equity asset class in the small and mid cap stocks, provided the stock selections are good. So it's going to be a game of stock selection in the short term.
Fair point. You definitely talked about a very important point, that's gold. And gold and silver both have hit record high levels on the MCX today. Even on the international level, we've seen gold surpass $3,500 an ounce. We've seen even silver cross $40, as well as a mark which has been seen for the first time too. So record high levels both on international as well as domestic level is what we are seeing. At this point in time, if I have to ask you, because we are right ahead of the festive season also, and given the new scenarios that you just talked about, how is the trajectory for both gold and silver poised to be going forward from here?
Definitely. Silver has rallied in the recent weeks. Gold has remained lukewarm. So now time for gold, because compared to silver, gold perennial has one unique advantage, because that is the central banks prefer gold to silver, and they are the biggest buyers of gold. So, the ETF funds may buy both, but gold has got inherent advantage. So I was, little apprehensive about the rally continuing the gold till about a month ago. But now I have changed it, because definitely the rupee will come under little more pressure, as we have been exporting more than $85 billion worth of goods to America. So it is estimated that 53% of that would be affected. So we may lose 20-30% of the exports to America. So that also can have some impact on the rupee exchange rate. So plus, in the political realignment, there is a possibility of the Asian countries, particularly Russia, China, India, tilting more towards gold rather than buying American treasuries. So that is also quite possible now in this realignment of political equations. So therefore, I think the gold should do much better than silver in the short term.
Okay, fair point. So that's as far as gold and silver and the outlook on the precious metals is also concerned. Coming back to the equities to see where the momentum is. Currently, it's the auto space that's actually zooming forward. We do know for a long haul, auto stocks and the entire sector has been facing a lot of headwinds, but things seem to be coming back on track for the auto space. One, with the expectation that the GST rate cuts that will be finalized this week could lead to higher sales and volumes. Those that were people who were deferring their purchases might just want to take the benefit of lower taxes as far as the purchases go. We've also seen a lot of sales numbers also come through today. That's pulled up 4% higher. Bajaj Auto, Hero, M&M all are higher. We're also given to see right now how Maruti Suzuki, numbers are also coming in. The total sales for Maruti Suzuki is at 8.89 lakh units vis-a-vis 8.78 lakh units a year ago. So there is an uptick there. We are seeing even the domestic sales, however, they've slightly dipped vis-a-vis year on year. So domestic sales at 7.23 lakh units vis-a-vis 7.58 lakh units. However, we are looking at a total export figure that has actually jumped smartly to over 1.65 lakh units from 1.20 lakh units a year ago. And we are also seeing higher sales for the mini cars that we are looking at this point in time as well. So those are some of the details that are coming in. In the last 1 month, we have seen an improvement, and Maruti is one stock which we have discussed in the past quite a bit, and you've thrown your weight behind the stock as well. What would you say is in the offing for such stocks, and within the entire auto basket, what's your top preference?
Yeah. So there are 2 points. One, Maruti Suzuki, I think it has played out beyond expectation. One should sell, I believe.
Okay.
And I am very optimistic on M&M and Bajaj Auto. You rightly mentioned that there seems to be postponement of purchase of two-wheelers and cars in August month, hoping for GST cut. Now, that fact and the monthly sales numbers of these two companies have given a lot of confidence, because despite domestic sales going down, M&M has done phenomenally well in the tractor segment, some over 28% year-on-year jump in the domestic sales. So then imagine when GST reform happens and the domestic sales of cars also pick up, M&M is poised to do extremely well. Similarly, Bajaj Auto, the domestic sales of two-wheelers are down, but it has done phenomenally well on the export front. And it will also gain substantially when the GST reform comes. Now, this export growth is very key point for Bajaj Auto, because rupee is depreciating, it is likely to depreciate more. So player like Bajaj Auto would also get a margin benefit from the depreciation of rupee through the export of two-wheelers. So therefore, these two stocks should do well. And also one should look at tire stocks like the leader in tire industry, that is MRF, because when after reform, GST reform, there is a possibility of pickup in the demand for entire automobile sales, which was growing in a poor single digit as a sector as a whole. So that would be positive for tire industry, because right now only the replacement market is helping them to grow. So once the OEM segment also picks up, I think tire industry will do well. And also both natural rubber and crude oil, they are down almost about 18-19% from the 52-week high. And in the last 10 to 15 years, more than the sales growth, the margin expansion on account of significant correction in the oil and natural rubber helped the tire industry stocks to create a phenomenal wealth for the shareholder. I may be wrong, but I have a tremendous confidence that once again, after a gap of 3-4 years, time has come for the tire stocks to play out in a big way, thanks to already the inputs are corrected and more correction can happen. So this is my take on the automobile sector.
Okay, fantastic. Another space that I wanted to ask you, which we have always discussed even before, is Reliance Industries, sir, the largest listed company on market cap. Now, this is why I'm bringing this up. Friday is when we had the annual general meeting. One, I wanted to understand, what have been your biggest takeaways from the annual general meeting that came in. Two, we will try to understand the biggest announcement, Geo IPO, what it means for the 44 lakh shareholders of Reliance Industries, and how should one really look at Reliance Industries as a stock price performance from here on. So those are the 2-3 aspects that we will focus on. Let's start off by the AGM itself. Your top understanding from the AGM, sir.
Definitely, I was expecting these kind of announcements, and it has given a lot more confidence. But it was a surprise after these announcements. Stock, corrected intraday very badly. Of course, market, you can't predict exactly in the short term. It always is more smarter than analyst. But the point is that the takeaways are really fabulous. Expanding into AI, new energy, and also giving a clear vision for the growth of efficiency business. They all, going to increase the top line substantially. And not only that, historically, the Reliance was a oil and gas company and then petrochemical company. Now, there is a great transformation from being a commodity company into consumer-oriented company. Now, in the AGM, all the takeaway points are more towards the consumer oriented business, even trying to, create a vision of creating 1 lakh crore turnover for FMCG, new energy, AI, all this. So definitely there will be a re-rating for the stock in the medium to long term. And secondly, Reliance has invested heavily, lakhs of crores in the recent years on capacity expansion. Therefore, it has got a debt. Now, this Reliance Geo, I am sure, we don't have the details, but I am sure roughly about 65,000 crore of debt on the standalone basis can be wiped out possibly if the company opts for offer for sale from the Reliance holding. Then the company, can reduce the consolidated debt also substantially, and then again it can finance all this visionary expansion through further fresh dose of debt. So therefore, I believe that two set of facts. One, the vision to create new businesses to the size of what they already done in telecom and retail, and then unlocking value through listing of Geo. So both, I am pretty confident that the Reliance Group would succeed, and I think for the medium to long term, it is one of the fabulous stocks for the investment.
Okay, could you also help us understand? A lot of investors must be also looking at this as an opportunity, whether one should just continue to start accumulating Reliance Industries till the time, because first half of 2026 is when the Geo IPO is expected. So till that time, should one continue to invest in RIL ahead of the Geo IPO on a monthly basis or not? Plus, or should one keep some stash away for the IPO of Geo itself? Will that create more money and more wealth? The third thing that I wanted to discuss is how does one compare with what happened with Geo Finance, because that was seen as a buy one and get one bonus share if you are a shareholder of Reliance Industries. This one is going to be completely different. Could you explain to us all these scenarios as well?
In fact, a lot of investors were asking, can they get a benefit from Reliance Geo like a Geo Financial? So there is a big difference. One has to understand. Geo Finance took birth in the stock market, then it started building the big business. Whereas Reliance Geo, Reliance Industry has sacrificed a lot of money, capital to create the size. So
Yes.
it is very unfair to expect, the free allotment of shares. And but however, ultimately the Reliance shareholders are going to be the beneficiaries because the Reliance industry would unlock money, cash, and reduce the debt and use that as a cash cow to expand further. So ultimately, the EPS will expand many-fold, and there will be the PE multiple also re-rating would happen because the share of oil and gas, which is already less than 50% in the total consolidated profit, would come down drastically as other businesses take off. So therefore, the Reliance industry shareholders would definitely benefit. Reliance Geo Finance, yes, I continue to maintain that it's a phenomenal wealth creating stock if somebody is willing to invest for next 5 to 8 years. And Reliance Geo or Reliance Industry, which one to buy? I would prefer Reliance Industry. I would, recommend only, keep adding whenever there is a dip in the Reliance Industry because having spoken all positives about Reliance Industry, we should also talk about short-term concern, which is, importing oil from Russia and exporting petroleum products. So there could be some short-term little margin pressure. So, but again, that will be only a short-term concern because medium to long term, the share of oil and gas and chemical itself will go down drastically. So, whatever stress comes there, the Reliance can manage it. Now, whether to buy Reliance Geo or Reliance Industry, I would still prefer Reliance Industry because I don't think having invested lakhs of crores to build a Reliance Geo business, the pricing is going to be very cheap to give a fabulous return on the listing or in the short term. Yes, one can definitely hope for some gain on the listing, but the pricing is going to be optimal, considering its the duopoly market and its fabulous achievement in the last 3 4 years. So one can take a call on Geo only after listing or on the time of IPO for applying. But till that time, I would give a buy recommendation on Reliance whenever it keeps dipping, mainly because of these global political issues.
Okay, fair point. So that's, I hope, has given a lot of clarity to all these investors who've been very enthusiastic about the upcoming IPO opportunity from Reliance Group and how the stock is likely to perform as well. Let me also shift focus a little bit to find out about, what else is happening in the market. Today, a lot of EV related stocks, which have been so far laggards, have been jumping about. Say, for instance, Ola Electric, Ather Energy. These are the shares that have actually rallied pretty sharply. Look at Ola Electric, for instance, is up by over 15-16%. In fact, the stock has already rallied over 32% odd in just the last 1 or 2 days of move itself. Even Ather is also the rival of Ola Electric, but having the parentage from Hero Motors is also moving up in tandem today. So you look at Ola Electric, which has rallied over 63 odd levels now, 17% almost higher, and look at even Ather Energy, which has hit a record high again in trade today as well. I wanted to understand from you, Mr. Chokalingam, how are you looking at these stocks which have so far been, under some pressure? What do you think is behind this smart move of Ola Electric over the last few days? Does it change the way one looks at Ola?
No, it has become a momentum stock, Ola. And, we have seen many times, the stock flaring up and then also falling very badly. Uh, you know, there are two things. One is that, that I believe that traditional two-wheeler players are better positioned to, participate in the competition in the EV two-wheeler and consolidate the market share, because most of them are already making thousands of crores profit in the traditional fuel-based two-wheelers. So similarly, what happened in the telecom, those who are diversified companies were able to retain and grow, or the early entrant could succeed, but others had a problem. Similarly, here the traditional monopolistic player in the two wheeler, they are in a better position to participate in the competition, cross subsidize the EV business and grow it. So therefore, I would have a bias for these well established players like Bajaj Auto. And Ola, I already spoke a lot. I don't want to be sounding too negative. I would only say that I will decode. It has made a lot of losses. So even if I give 40 PE to 40 45 PE to justify the Ola rally now, the company has to make every quarter about 1,000 crore of profit from the losses. So I would not give buy or sell. I will leave it to the investors to decide if they think Ola can come back to roughly about 1,000 crore net profit per quarter, and then one can buy this stock at current level, hoping to give 40 45 PE to the stock. So personally, I am not confident whether how soon this company can start making. When I say 1,000 crore, that is from a loss of around close to 500 crore to profit of 500 crore. So the 1,000 crore delta change has to happen from the negative territory to positive territory. If the company is capable of doing that, I think it deserves this kind of rally.
Okay, fair point. 3:23, we're about 7 minutes away from the day's close right now, and seems like a positive, start to the September series, because we are 200 points higher in trade. Another important change that happens mostly for the traders community, the derivatives community, is that tomorrow will be the Nifty options expiry, viewers, the weekly options expiry. You must be used to of looking at this expiry only on Thursdays, but tomorrow onwards things change, as has been recommended by the stock exchanges and by SEBI as well, as has been decided that NSE weekly expiry, Nifty weekly expiry, will now take place on Tuesdays, whereas for Sensex it will be on Thursdays now. Does anything change, do you think, Mr. Chokalingam, for the average trader at large? What should they remember?
Uh, my only concern is that there is a structural change happening in the stock exchange business, so investors should be aware of that. One, as all of us know, the regulators are going to make the attempt to reduce the risk parameter for retail investors in F&O, which obviously, in my understanding, would mean a reduction in the trading volume in F&O, which could be negative for stock exchange companies. And second, a major structural change which I am anticipating is the exchange business becoming universal business. That is, like NCTX, it has proposed to get into the F&O in equity. which is primarily into commodity exchange. So what is going to happen ultimately in the medium to long term? Any exchange can get into any other class of exchange business. So commodity exchange business can get into this stock exchange, particularly F&O. So I am expecting the duopoly status to be disrupted, and I see lot more competition in the F&O business, because already Metropolitan Exchange also got a lot of funding, and NCDEX proposed to get into F&O equity. So one has to, before aggressively chasing these stock exchange stocks, one should be aware of this development. So the caution is needed. However, that kind of caution is not needed for depository business, because uh, I don't think that the depository business would be open to many, because of the criticality of holding the assets. Uh, Therefore, I would prefer stock like CDSL to exchange stocks at the current juncture.
Okay, fair point. I hope this has also given a lot of understanding to our viewers there. All right, Mr. Choklingam, towards the end, help us understand any of your choice of sectors or stocks that have come afresh onto your radar that investors can look at for the rest of the calendar year. Anything that has come up for fresh?
One only stock is that in the large cap, I am extremely bullish on Bajaj Auto, but
Okay.
in the small and mid cap, East India Hotel. Personally, I do not own it, but I believe East India Hotel is a possible wealth creating stock. It is the cheapest stock in the hotel business as compared to top three players. And second, there is a long list of expansion. If you go through the annual report, latest annual report, it's really surprising. EH Limited has proposed many expansion which are already taking place. And third, if you look at the shareholding pattern, ITC and Reliance Group together hold more than 30% stake in EH Limited. So I believe, considering the industry tailwind in terms of robust outlook for hotel industry, relative cheap valuation, and the shareholding pattern, and also the expansion plans of EH Limited, I think this is going to be a strong, solid, small cap stock to possibly can create a lot of wealth.
Okay, fair point. All right, Mr. Choklingam, thank you so much
Thank
then for being with us on the program, helping us with all your views on the markets and specific sectors and stock ideas as well. Always a
Thank you.
pleasure to host you. Thank you. All right, viewers, 3 minutes to go. Let's start wrapping up. 200 points higher. We definitely are looking at ending above 24,600 odd mark near the day's high point, 0.82% up in trade. So 200 points of a jump is what you got on the Nifty. Even on the Nifty Bank, there is about a 0.6% of a jump that you can actually see. So that's also ticking higher. Auto is definitely in the driver's seat, 2.8% higher. The top moving sector. Consumer durables up by over 2%. Mid and small caps also rallying pretty sharply now, 2% higher for the mid caps. After a long haul, you're actually seeing such a smart move on the broader markets as well. Let's look at the top movers on the mid caps, led by Ola Electric, 16.5% of a rally there. Aditya Birla Fashion and Retail is up by 7.5%. Tube Investments is up. Dixon Keynes, both are higher. You're also looking at smart move on the defense-related pack stocks like Cochin Shipyard, for instance. It's up by 4.5%. You also have some capital markets-related stocks like Motilal Oswal Financial Services, BSE also ticking higher in trade. Of course, consumer durable names, railway-related names like RBNL are also higher. Within the IT pack also, that was seen as supporting the markets right from the word go. You could see Emphasis, Coforge, Oracle Financial Services, Persistent. So the mid caps are doing well, better than the large caps at this point, but across the board there is some move that you can see on the positive end. Metal stocks are also higher. Of course, we've been seeing how Hindustan Zinc has been ticking higher from the word go today. Almost 4% of a move that you can see on the higher side, and this is on the back of the silver prices that have hit record high levels as well. Others like Nalco, Lloyds Metals, Vedanta, APL, Apollo Tube, Steel Authority, all of these stocks are also on a higher trajectory right now. Pharma, media stocks, although on the declining end, India VIX is also weaker by about 4% now at 11.3 odd levels, but rest of the sectors are all up. Bajaj Auto, top mover today, 4% higher, nearing to the 9,000 odd mark now. M&M, Tata Motors, Eicher Motors, they're all up and about. On the declining side, you have Sun, Pharma, ITC, HUL, Cipla, Titan, all of them dragging in trade. Let's look at F&O. Keynes Tech, Dixon Tech, both higher. Tube Investments also up in trade right there. So there you have it. Those are the names within the broader markets from the F&O space. But from the broader markets, the Nifty 500 names, you must look at some stocks like RPP Infra Projects. I think there was a big order flow there, and that's pulled up the stock to a 20% circuit on the higher end. British Standard Communications is also higher in trade today. That's also moving up smartly. Apart from this, you have Zydus Wellness that's higher by almost 10.5% in trade. Lotus Eye Hospitals is another one that's also on the move. So some such stocks here and there that are also in momentum today. But there you have it, the closing session at 3:30, 24,624, 197 points higher in trade as far as the Nifty is concerned. So we'll wrap it up on that note, viewers, but do stay tuned with us onto Business Today Television as beyond the market hours. We continue to share you coverage from the world of business and finance. Stay tuned.